Welcome to Everything Money. In this video, we will look at Momo, the stock Momo, a Chinese company. We will look at the financials and fundamentals. We will show you how to look at these using our software, and more importantly, what you should be paying for this company, this Chinese company. If you want to trade Momo and all the swings with a lot of Chinese companies, we will go over to Trader Mo, and he will show you the charts and trends on how to trade this at a quicker pace. But first, why should you be watching us and listening to this channel? I bring your normal person questions. I'm a photographer in Ohio, and I'm talking to two wealthy guys that manage over $100 million in real estate across the globe, businesses, and stocks. And they will teach you the mindset of investing in many companies, but this one, Momo. Paul, tell us your thoughts. We've done a lot of shows about Chinese companies. This is another Chinese company that has gone down in the past months, and perhaps it's a buy for us. I introduce Paul Gabriel.
Thank you, Seth. First off, guys, follow us on Instagram. We have a new Instagram account that's growing like crazy. And also follow us personally because, well, we're fragile egos, so we need that.
It's true.
So here's our Everything Money software. I'm going to go to the 8 Pillars tab, look up Momo.
Now, Paul, this is a social networking. This is like the Bumble of China. I know you are on you were on all these apps, Paul, swiping around, finding those.
Is it Bumble of China?
Is that true, Mo?
I don't think it is.
Well, Seth has said it multiple times, so that's why I said it.
When?
I have no idea what this company
No,
does.
I don't think that's Momo.
I thought Momo made steering wheels.
A lot of people out there will say, "Oh, you must understand the company."
What
No.
idiots, right?
Screen first for the numbers. If the numbers make sense, then you go look at the company itself and say, "Is this a company I want to be involved with?" Every good value investor out there will say the exact same thing. Every YouTube moron will say the exact opposite.
Yes, go look at the 10K.
Would you rather be like Warren Buffett and Charlie Munger? Because Warren Buffett and Charlie Munger will tell you, give us a call. In 5 minutes, I'll tell you if I'm interested in going further or not.
This is how you look at deals. Folks, Paul will sit in an airport and evaluate a 300-unit apartment complex for $12 million in 5 minutes.
This actually happened.
You don't need to look at 10Ks and listen to conference calls for hours on end.
To start.
Immediately, that's right.
You don't need, and guess what? When we made the offer on that property, if they accepted it, then we'd have gone into our due diligence phase.
There you go.
But Warren Buffett always says, give us a call, send us your financials. In 5 minutes, I'll tell you if I'm interested or not. We want to make sure that people understand, like, Warren Buffett is not stupid. I mean, let's all agree on that right now.
Got it.
Warren Buffett does it the exact same way we do. YouTube celebrity morons do it the exact opposite. They spend you know why? They want to justify overpaying.
I see.
Because if I really like the company and it's great and the people are awesome, they're changing the world, it's okay if I pay a nosebleed valuation.
And you should too. And you should too be paying that nosebleed valuation.
And I will not. I will not do it. Neither will Warren Buffett, neither will Charlie Munger, neither will all the other great investors of all time. But if you want to do it and be different than them, by all means, go right ahead. But when you're walking off the cliff, don't drag me down with it. Don't drag the other people down with it.
What is the market cap of Momo, baby?
Momo is $2.6 billion. Now, $2.6 billion. As a comparison, we did Palantir recently. It's a $49 billion company. Revenue of $2.3 billion. Palantir's was $1.2 billion or $1.3 billion.
Wow.
So our first metric, guys, we want a 5-year PE less than 22.5. 7. Check mark.
Jeez.
Now remember, China has been hit really hard with these stock prices. Let's go look at their chart. Look at this chart, Uncle Seth.
Yeah, that's the 1 year.
This is the 1 year. It hit a peak of 20. Got as low as 10, and now it's sitting at 12. So it's dropped a lot. Pillar number 2, we want the return on invested capital, which is the money invested in the business through debt and equity. We want a return on that of over 9% over a 5-year period. It's 15.2%. Check mark there.
Pretty good.
So yeah, this is a technology company, which makes sense that happens. So 2 checks so far.
Pillar number 3 is, I'm sorry, Paul, look at that dividend.
No dividend. And here's our free cash flow numbers in the main part. But pillar number 3 is
profit. Listen to me. I'm so silly.
Why do you do this? Why do you do that?
We should just switch them for me. Revenue growth over the past 5 years. I'm sure the revenue is
all
growing.
you want is growth. $1 billion to $2.3 billion.
Good, yeah.
Check mark there. Yep. Pillar number 4 is profit growth.
I knew that one.
Boom.
Over the last 5 years.
Thank you,
281, 318. Check mark
Mo,
there.
will you just whisper in my ear revenue as soon as 3 comes up?
So here's what's interesting, though. The revenue is up over double, but the profit is not. So I don't understand that.
What does that tell you?
I don't know. It just tells me that it tells me that something's not
in sync.
Maybe they're spending a lot of money on, maybe they put a lot of money into the property, into their products, and they had to depreciate it. Whatever, there could be write-offs involved. Are there write-offs? No, barely. $1 million write-off. That's nothing.
Speaking of NSYNC, Paul was the 6th member of NSYNC, but they dropped him because he couldn't dance.
So first off, NSYNC is a phenomenal band.
Go on.
I don't want to hear any haters about it. I went to an NSYNC concert on the Pop Odyssey tour back in 2000 at Brown Stadium, and it was phenomenal.
Wow.
I don't want to hear any talking bad of NSYNC, okay?
That was my second CD I ever bought.
Was it?
Yep.
Which one, Pop? Or No Strings Attached?
No Strings Attached.
Come on.
I bought it from Sam's Club.
The comments will be filled on this video.
And if you hate on me, I don't care. I don't care. My first ever concert was Celine Dion.
Which I'm extremely jealous about because I love Celine Dion.
In Blossom Music Center.
What are you
And
people-
Joan London came on stage. I don't know why Joan London was there, but she came.
Share is outstanding, Paul. Oh, no, wait.
I
Profit
thought you were about
growth.
to say
No, we
Cher.
did profit growth. I wrote.
Share is outstanding for Momo.
Guys, one of the biggest killers of investors is shares outstanding, dilution of your owner. What this means is if they're issuing more and more shares, they're diluting you as an owner. Does it mean that issuing shares is always bad? No. Is buying back shares always good? No. But we want to see somewhat of some responsibility here. So we go to the bottom of our income statement on our software, 197 to 205. That's an X. Now, with that said, in the last few years, it is down a little bit, so the trend could be changing.
Pillar number 6 involves their debt, Paul.
So what we're going to do here, we worry about debt on any company because of recessions. If a recession hits, companies with less amount of debt will last longer, just like your neighbor. If you guys have the same lifestyle, same everything, but they have $1 million in debt, you have zero, who's less likely to declare bankruptcy? You. Same thing here. We go to their main page of our software, look at the 5-year average free cash flow, 481. We multiply that by 5. That equals $2.4 billion. We want their total long-term liabilities to be under the $2.4 billion. And guys, if this math is making your head hurt, we have, for a part of our software, I'll show you the part that does it all for you. You don't have to worry about the math. So we go to the balance sheet, scroll to the bottom, total long-term liabilities, $780 million. They can pay it all off in less than 2 years. So check mark there. Our final two metrics, our final two pillars have to do with cash flow, because cash flow is the real thing that matters. Free cash flow is cash from operations less your capital expenditures, and you can use that money to do one of 5 things, or a combination of them. Buy back shares, pay dividends, pay down debt, make acquisitions, and invest in the business. So what we do here is cash from operations less your capital expenditures. Uncle Paul, exclusive to our Everything Money software, added this line to the cash flow statement to make the math easy for you. 376 to 309. That's an excess.
Going down, huh?
Yeah.
But you got that. Look at that 466. What happened last year?
I don't know. So this is part of the due diligence to do as part of the company. Figure that out. Then our final pillar, we take the average of the last 5 years free cash flow, which, like I said, is right here because I'm such a nice guy. We multiply it by 20 to come up with a value. $9.6 billion. The market cap is 2.6. 2.6. So that's a massive check.
Wow, we've never had this much of a discrepancy, Paul.
Yes. Does this mean you go out and buy it tomorrow?
Yes.
It does not.
Uh-oh.
Now, what are the issues we have? Now, here's the 8 pillars section, by the way. The 2 X's we had were increasing shares and cash flow dropping. Guys, remember, China has issues with its data, there's a lot of issues with China. So that's something to figure out here is if you want it. We own Alibaba stock and we're buying more of it. I feel comfortable with Alibaba because Charlie Munger felt comfortable with the data coming out of Alibaba. Now, I don't follow Charlie Munger's exact valuation. I don't even know what his value of Alibaba is. But what mattered to me was that he believed the numbers. What we're going to do here is this software was created. We look at this software to help us determine things, but there's still intangibles you have to understand. We created this software because our subscribers wanted to be able to do research on their own without waiting for us to make up, because there's 10,000 companies out there. So we made the software. We invested hundreds of thousands of dollars to make the software. You get everything you've seen here, plus our stock analyzer tool, which you'll see in a few minutes. You get all of this on your phone, because it's an app also. You get exclusive content every single day, 2 or 3 videos of us talking about things that are exclusive only to our software people. You get access to Seth, Mo, and I, and you get access to 6,000 other people who buy the software that you can talk to in our chat. If you feel like you're on an island out there, that you don't have anybody to talk to about investing, this is your way out of that. And the best part is, guys, 90 cents a day. That's all this costs. Less than a cup of coffee. It will change your life if you just change your returns. by 1 or 2% a year, or save your losses by 1 or 2% a year.
I love this thought. Save the losses.
Absolutely, because good investing is about saving your losses. You will make hundreds of thousands, if not millions of dollars more. For 90 cents a day, it could lead you to millions of dollars. All of it, everythingmoney.com or Patreon. You can sign up either way. You get access immediately with both. The benefit of everythingmoney.com is there's no double charge in the first month like on Patreon, and we don't charge sales tax yet because we're not big enough, unlike Patreon. So you save money on both ends on everythingmoney.com. Join 90 cents a day. Do it. It's a no-brainer.
The final piece of the puzzle, folks, is what should you be paying in terms of a ticker price? We've shown you the financials. We will now use the stock analyzer tool, put in some assumptions moving forward based on this data, and see what we should be paying for this company. Paul, this stock was $52 a couple years ago, down to $12. Show us some of the assumptions you'll make moving forward about what to pay for this in return on investment.
All right, guys. So this is the stock analyzer tool. You first start with picking your number of years of analysis. I usually go 10 years. I don't know if Momo will be around in 10 years. I really have no idea. And we're going to do 3 assumptions. You can pick 1 or 2 or 3. On smaller companies, I can do three assumptions. Revenue growth. The revenue is actually down in the last year. But China's a growing country, a lot of potential. Let's go with 8, 12, and 16% revenue growth. Share change. Let's go with issuing 1.5%, keeping it 0, and buying back 1%. Profit margin, 13, 15, 18. Sorry, 13, 16, 19. Free cash flow margin, we'll do the exact same thing. Now, PE, guys. It is China, so let's be a little bit conservative because everybody's going to be conservative about it. And now for the return. I always pick 12.5%. Why is that? Because if you invest in an ETF based on the market, you're going to make 10%. So to go buy an individual stock,
A little more risk.
yeah, go make it worth your while. Or else just invest in the market. Hit the analyze button. The stock is currently $12.73. Guys, if you believe these numbers and you believe this company, this is a buy all day.
All day.
All day. Not even close. Not even close. Like you should
Show
be
them those
buying
numbers
it.
again, Paul. So if you pay
Even on the lowest of assumptions,
that price today, you'll get that return over the next 10 years.
you'll get more than that because you're only paying $12.73. So let's put 15% return in here. Nope, still more. 17% return. Nope, still more. 18% return.
Jeez.
Nope, still more. 19% return. There you go. You're basically, if you believe my lowest assumptions and they turn out to be true over the next 10 years, you're going to make 19% of your money by buying it for $12.73 today.
We've never had a stock come in with this many flying colors, Paul. So what are your hesitations? Why is this not on your radar? You have to learn more about the company, right?
Yeah, it's a smaller company in China. Tech, especially in growing economies, is very difficult because any small thing can change very quickly to get people on a different app or doing different things. So just do your research on what kind of company this is. Are they ingrained in Chinese culture? Or are they not? Because if they're not, I'd be very apprehensive.
I see, because something like Alibaba is already ingrained into our culture. You use it. It's at the airports already.
Correct.
So we're going global here.
I will say this, though. If there are 100 companies like this out there with these numbers, I'm buying it all. I'm buying all 100 companies all day. Because 20 or 30 will probably go out of business. 20 or 30 will do okay, and the rest will just probably kill it. And I'd probably make pretty close to 19% returns.
If you're interested in trading this at a quicker pace, you can join the Bid and Ask Nation in our community, that top tier of traders, and you talk to Trader Mo every single day. He announces his trades and guides you through the trading process. Mo, show us those charts. Look at that puppy.
So this is back in February at that $20 level or $20 plus. And then all of this happened with all of the Chinese regulations and everything. So for a long time, I was saying don't go and trade these Chinese stocks just because of the volatility. I think that the news is gone. Everything's calmed down. I think it's perfectly fine. And look what we have here. We have a very nice developing trend right now. Now, the only issue is this is a strong resistance point, and it tried to fight it back here, and it tried to fight it there, and it has failed both times. So to me, I would look at this and say, well, what was that? That little run up right there, even though we were in a downtrend, why don't we go over to the swing trading chart and see what this is why you can make money in all types of markets. You could do it from a long-term perspective, short-term perspective, what have you. This one was very nice.
What chart? What is this, a weekly chart or what is it?
This is the daily chart now.
Okay.
But you see how, look at this trend right here. This is the daily chart trend. Now, when I went to the weekly, it was a downtrend.
Yeah.
So this just shows you how you can be in the same stock going long and short depending on what you want to do. This one was perfect. Engulfing candlesticks running up, you got through the 100-day moving average here, and as soon as you drop down there, you sell it, you take your profits, and you move on. This, I just wanted to point out to you guys that you can trade things from a long-term perspective. We have a developing trend right now. You can do things from a daily perspective like this that are much quicker in and out of the stock. So this was about 10, 15 days in total. So if you want to learn how to do this, come and join me in the Bid and Ask Nation. The Trading 101 series will help you do all of that. You'll learn all the tips and tricks and learn the process and stick with me.
That is our take on Momo. We will update you moving forward. An interesting company, Paul, with so undervalued at the moment, according to our numbers. Incredible. Follow along with our videos. We've done over 1,000. This is one of the fastest growing investing channels on YouTube, soon to be one of the biggest when we bypass everyone else in the next 2 years. So come along for the ride, fondle that thumbs up, and we'll see you next video.